Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday the 30th of June. I'm recording the video today, 7:30 p.m. Eastern Standard Time, just a little after. I was expecting downward movement. We have a small green candlestick, a very slight new low, but mostly sideways movement for Tuesday's session. I have a new wave count, but it's still going to expect at least a little bit of downward movement. So I have two bull wave counts and one bear. Both the bull wave counts and the bear for the short term expect a little bit more downward movement to 2039 to 2037. And after that, how high the next movement goes will tell us which wave count is correct. Let's have a look at the new wave count, which looks at this ending diagonal again, possibly incomplete, and this movement is a fourth wave correction within the diagonal. We should always assume that the trend remains the same until proven otherwise. We don't have enough confirmation of a big trend change, so we should assume that the S&P remains in a bull market. This is the strongest piece of technical analysis on all the charts. This is not an Elliott channel. This is a traditionally drawn technical analysis trend line as explained by McGee in that classic technical analysis of stock trends. It goes back to November 2011. It's reasonably shallow. It's repeatedly tested. It's starting to break down. It's no longer showing where price is finding support, and I expect now price will remain below it and find resistance at that trend line. And to use it correctly, we need to wait for a close, 3% or more of market value below that trend line before it indicates to us we may have had a change from bull to bear. I'm also going to wait for confirmation of the alternate with a new low below 2022.07. If we get that and a close at 2055 or below, then the alternate wave count will be confirmed, and I would then expect we've had a trend change at least at primary degree. But while we don't have confirmation of a trend change, I'll assume that the S&P remains in a bull market. To end primary wave 3 for the bull wave count, the final fifth wave at minor degree is unfolding as an ending contracting diagonal. The regular technical analysis equivalent structure is a rising wedge, and they are terminal structures. An Elliott wave ending diagonal requires all of the subwaves to be zigzags, and the fourth wave must overlap into first wave price territory. It's convention with an Elliott wave to always draw the diagonal trend lines to indicate that's the structure, and that's why you see this third wave labelled as a zigzag. It's a third wave within an ending diagonal. The diagonal is contracting because the third wave is shorter than the first wave, which begins off to the left of the chart at 1820. And so the fourth wave may not be longer than equality in length with the second wave, and the diagonal trend lines should converge. The fourth wave may not move below 2022.07. A new low below that price point would invalidate this wave count and confirm the alternate. The fourth wave must be a zigzag. So far we have 5, 3 and an incomplete 5 down. When the final fifth wave arrives, it too must be a zigzag, should at least make a new high beyond the end of 3. It's really unusual for fifth waves of diagonals to be truncated. And the fifth wave will be most likely to end only when it overshoots the pink 1-3 trend line of the diagonal, because that's a really common look for a fifth wave of a contracting diagonal. Let's look at how the C wave of minute 4 is unfolding at the hourly chart level, where minuet C, not minute. B ends up here, and this is where C begins. C must be a 5-wave structure. I think we're seeing an extended fifth wave within this impulse. We have 1, 2, 3 has no ratio to 1, that's important. 4 shows alternation with 2, it's a flat, 2 is a zigzag, and the fifth wave looks like it may be extending with 1, 2, 3 now over. 4 again, alternation between 2 and 4. Micro 2 here is a zigzag, the fourth wave here is a flat correction. So I'll expect now a final fifth wave down at 2037. Subminuet wave 5 will reach 2.618, the length of subminuet 3, and at 2039 minuet wave C would reach 2.618, the length of minuet A. So that gives us a 2-point target zone for the final wave down, which may be reached tomorrow, to end before we reach that maximum limit for the whole movement of minute 4. When markets open tomorrow, any further upward movement If it's this fourth wave correction continuing as a double flat or combination, it can't move into wave 1 price territory above 2095.38. An invalidation to the upside of this wave count would indicate that my labelling of mini wet wave C is wrong. It might have been over down here. A new high above this price point would tell us that minute wave 4 is over and minute wave 5 upward would then be underway, but I expect we do still need a final fifth wave to complete an impulsive structure from this high up here. At the daily chart level, this is now again an alternate wave count because we should always assume the trend remains the same until proven otherwise. And so we should assume that we haven't had a trend change at primary degree until we get some confirmation of it. At this stage, we now need a new low below 2022.07 to invalidate the new main wave count and provide some confirmation of a trend change at primary degree for the bull or possibly even supercycle degree for the bear wave count. The target for minute wave 3 is the same at 2037. This third wave would reach 2.618, the length of the first wave. So for tomorrow, both wave counts expect some downward movement. If we eventually have primary 4 arrive, and it will eventually arrive, the bull wave count sees a cycle degree first wave unfolding up within a super cycle degree fifth wave, and within cycle wave 1, primary 4 is going to have to turn up at some stage, and eventually when it does, this is pretty much what it's going to look like. I'll expect it to exhibit alternation with primary 2, which was a relatively deep, quick zigzag lasting 12 weeks, one short of a Fibonacci 13, and so primary 4 would most likely be a flat combinational triangle. They are more time-consuming structures than zigzags, so I'd look for it to last maybe a Fibonacci 21 weeks. It's likely to take price down to within the territory of the fourth wave of one lesser degree, and I'm confident that intermediate 4 has its price range from 1730 to 1647. I have a lot of confidence in that target range for primary 4 because intermediate wave 3 is an absolutely perfect impulse and it's less than 1 point off 2.618, the length of intermediate wave 1. With such an amazing ratio and the subdivisions fitting perfectly, I'm confident I have the end of intermediate 3 correct, and so the price range of intermediate 4 should be correct. So eventually when primary 4 turns up, and it will turn up eventually, it's going to be a reasonable sized bear movement. Fibonacci 21 weeks down to these lows is quite a substantial downward movement, but I don't think we're quite there yet. We may be, and we'll have confirmation with a new low below 2022.07 if that happens this week. For the bear wave count, the structure is seen differently at supercycle degree, and I recently published a supercycle analysis on the website. So if you want to have a look at bull and bear, and it's linked back to every day in the text article, it's there under supercycle analysis. It's possible instead of 1, 2, 3, we're seeing ABC unfolding upward for a zigzag for a B or X wave, that we're still within a huge correction for a supercycle wave 2. That when X or B is complete, we'll have C or Y down. A huge market crash could be coming up. But we would need some confirmation of this idea. We have absolutely none at this stage. Some regular technical analysis at the daily chart level. Now we have some data for this strong downward day. ADX is turning up. It's above 15. It's not quite above 20, but because it's above 15 and it's clearly turning up, a new downward trend is indicated. This is possible. This would slightly support the alternate bullish wave count. On balance, volume from here to here is trending lower, while price is moving higher to new all-time highs. This negative bearish divergence indicates that eventually, when we get the trend change, the next piece of downward movement may very well be deeper and longer lasting than these small corrections against the trend more recently have been. This downward movement is supported by volume. We have rising volume, and this day, although it's not stronger than this day, is stronger than these two prior down days. So overall, while price has been falling, volume has been rising. This downward move is supported by volume, and that slightly supports the alternate bullish wave count. On balance, volume has come down again on this candlestick here to touch this trend line, which previously provided resistance and is now providing support, and we have a little bounce up initiated from there. If my main wave count is correct, on balance volume may again come down to touch that trend line, and that bit may initiate the final bounce up for the final wave. This negative bearish divergence with on balance volume is telling us we're going to get a more reasonable sized bear market for at least a little while, but it doesn't tell us when it's going to happen. And so this divergence supports both the wave counts. It doesn't tell us which one is correct. That's all from me today with your S&P analysis, and I hope that all of our members are having a most awesome day.